Yeah. All right. Come on, viewers. In here on a Google Hangout broadcasting live to myself. The boy is in here lonely. Thanks. Thanks. Oh, I don't want to do that. No thanks. I got one viewer. Yes, I'm winning. I'll probably start in about another minute or two. Perfect. Hey, was it saying I was viewing myself? Okay. 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 The question or something. What is going on, Michelle? It says you are the only viewer so far. John said he is able to view it or is able to log on. We can see you. Can you see us? No, I cannot. I don't know how to do that. But you can hear me. Can you hear me? Let's see. Let's type this here. Okay, cool. All right. So let's go ahead and get started. I know that we started the group probably like last week sometime, maybe on Friday, and a lot of new people have been seeing like pretty much the five of the people that was in the previous group trading and probably have been out there confused like what are they doing? How are they making sense of this? Um, and like how do you get started? First off, I just want to thank everybody for reaching out to me and trying to be interested in the market and giving me an opportunity to try to teach y'all. So with that being said, we can go ahead and jump right into things. This typically when I teach people, this is my first time trying to do it over the internet. So like typically have an opportunity to ask them questions and interact with them. So if y'all don't mind, if anytime y'all have questions, just type it in that box and it pops right up. I can see the three things that Michelle's typed so far. So if you have any questions, feel free to just ask it at any time, and then I'll try to get to those. But one of the first things that I typically like to ask people is to tell me in their own words what are the differences that they know between investing and trading. And since like I am talking to myself, I just go ahead and talk directly about it. Typically, when people think about the stock market, their intrinsic knowledge and idea is investing. People want to buy things and hold it and hope that it goes up and then some arbitrary time in the future sell it. The thing about that is most of the time people don't have plans or an idea on when they want to buy or when they want to sell. They just go in and say, all right, I'm going to go buy as many shares of Microsoft as possible because in the future I'm going to sell it and retire and live off of that. That's not a plan in the slightest. That's just, in a sense, it's lottery. And basically, investing is the whole idea of buying something and holding it for a long term. And what we do and what I've been teaching, just the people I've been working with, is the whole idea of trading. Trading is pretty much going in on a short term basis. And what we typically do is day trading. We buy something and we get rid of it in the same day. So at the end of each day, when I'm trading in a practice account or whether I'm trading my real account, I start the day off with 0 shares and I end the day with 0 shares. Whatever money I make, I made throughout that day, and I don't hold anything overnight because even though we're not able to trade the stock market between 4 o'clock Eastern time, which is 3 hour time, and 8:30 the next morning, stocks can still move in price, and sometimes that price might not be advantageous to your position, and you can wake up and lose a whole lot of money that you didn't intend on losing just because you decided to hold something overnight. So investors, they typically buy something, hold it for an extended period of time, whether it be a week, that could be considered investing, or just holding the stock for a particular period of time, hoping that it moves in one direction. And traders, we get in and out on a short period of time. That brings up the question a lot of people always ask, like, how do I know what to trade, and what type of things do you typically look for when you're trading? But first, we want to just talk about like the stock market in itself. Um, there are over 75,000 tradable companies on the stock market. And with that, it's like what we do is we focus on stocks, what I consider high momentum stocks, which typically move between 4% and anywhere up to, there's no max. I've seen stocks move over 100% in one trading day, from 8:30 in the morning to 3 in that afternoon. That stock has either started at $8 and went to like $100, or $8 ended up at $20. But what we're looking for is that huge percentage move, and that's the things that we get in and out of in that same day. I will go to man, and the thing is, okay, there we go. Lights back on. All right. One of the things I wanted to show you is just like in regards to the stock market, just like how do you identify tickers, and tickers is pretty much like a small code that represents it represents the name of a company in which you can buy or trade throughout the stock market. So, for example, when people think about getting in the market, they always think about the big name things like Microsoft, Apple, and things like that. So, we're going to start out by looking at Apple. The ticker for Apple is AAPL. And at any time, if I'm going like, if some of the stuff I'm saying is not making sense or I'm going too fast, let me know. Type something in the question box or type something in our group me, and I can stop and explain it, because this is my first time talking to people that cannot immediately respond to me. So this is kind of new. So can you all see my screen right now? Somebody let me know if you can see my screen. I just put it on Yahoo Finance. These are a couple websites that I'm going to get you all familiar with over the course of this hour. So are you able to view that? And please take notes. I want y'all to make sure that this is not just something that we are looking at for one time. Let's take notes and try to make this stuff relevant to you, because you can make a pretty lucrative amount by trading, and I want you all to be able to have something that you take serious and make this worth your time. So if anybody wouldn't mind, let me know. Can you see my screen? Okay, cool. All right, so we're starting out with Apple, because that is pretty much some of the common things that people look for. Looking at Apple, we're going to start out with this huge number right here, the 95.12. This right here represents the price in which the stock is currently trading at. We all know that the market is closed, and it closed at 4 p.m. Eastern time, which is 3, which means that at this point, the stock price no longer moves in a tradable manner. It's going to be 95.12 and this is going to be the final price of Apple stock until tomorrow morning. Below that, we see after hours, and these are pretty much prices that large institutions and mutual funds and large banks, they have an extended period after the market closes in which they're settling on the rest of their trades. So even though Apple closed at $95.12, after hours the price went up to $95.45. This is not anything that's too significant, because throughout the trading day, that's where most of the shares are moved throughout Apple or throughout any stock. And once the trading day is over, it's like a few shares. It's like a small volume, which it moves the price. So the first term that we're going to go over is volume. And volume, as you can see on Yahoo Finance for Apple, is listed right here. Volume is the number of shares in the stock that are traded in that day. Two of the key things that we want to focus on this screen in regards to volume is right here, the daily volume, which is here, and underneath that, the average volume. And this is an average over 3 months. So every day, Apple on average trades about 56 million shares. Today it traded 55 million, which is right in line with this average. Now, one of the reasons that Apple is not a good stock in regards to day trading, it might be a wonderful thing for investing. If you want to buy $95 for one share of Apple and hold that for 10 years and hope that it turns into 9 million, by all means do that. But one of the things that makes Apple not a good thing for day trading is not necessarily the price. The price, we'll find out eventually that regardless on if a stock is trading for $1 or $95, the price really doesn't matter. What matters is the percentage move in Apple. So we see that Apple today dropped 47 cents. That's this red arrow and it being typed in red. Apple dropped 47 cents. So what is the significance of 47 cents on $95? If we're looking at that, inside these parentheses, which is the next thing we're going to focus on, Apple only moved 0.5% throughout its trading day. It took 95 or 56, pretty much 56 million shares to only move Apple 0.5%, which means that we're not really going to make a whole lot of money throughout the day putting up whatever amount of money to move at 0.5%. Let's say, for example, we want 100 shares of Apple. 100 shares is going to cost us $9,000 to only move 0.5%. So we put up $9,000 to only make about 50 bucks in Apple, which is not a good reward to risk ratio. Like you're only making $50, but you're risking $9,000 to trade Apple shares. That is not a good reward to risk. Um, oh, you said review tickers real quick. I'm sorry, I'm trying to bounce back and forth. The thing about tickers is, say for example, Apple. Apple is APPLE. A ticker is pretty much a four-digit code that allows you to go in and find that company in the stock market. So, for example, I'm looking at Apple right now, and that's AAPL. And if I'm trying to find Microsoft, I think that's MSFT, Microsoft, MSFT. That's the four-digit code that represents that company. Another one that, Microsoft is a major company that when people go onto these stock market games or try to do anything in regards to investing, they'll go for Microsoft, they'll go for Ford, they'll go for Apple, they'll go for people are typically told whatever you use on a daily basis, those are the products you want to invest in. That by far might work for investing, but in regards to trading, that logic is totally flawed. Once again, we see Microsoft, which is half the price of Apple, $43 a share, moved 29 cents. That's more than 0.5%, but once again, that is insignificant to the price of what this stock is doing. So that once again is another yes. The abbreviation for the company is pretty much what a ticker is. So you could consider it an abbreviation, but it really is a code for finding it in the stock market. So we know about the stock market is pretty much a collection of exchanges. An exchange right now is nothing more than a computer where people go to buy and sell shares of a stock. So the stock market is that entire collection of exchanges, which is we hear about the NASDAQ, the S&P 500. Those are pretty much indices for what the stock market is doing. So yes, please. If you can, let's type the questions up in GroupMe because that's easier. Like it pops up immediately on my iPad, and then I can see those while I'm still looking at my computer. Yeah. So if you type it right on GroupMe, they'll come right up, so it's not going to be delayed. So some of the more popular companies that we hear about, another thing that people will probably jump on and invest in, Ford. We see that Ford moved 15 cents on a $16 stock. It's still less than 1%. Let's see what happened with Facebook, FB. Facebook, $72, moved 82 cents. That moved a full percent, but once again, these are pretty insignificant when it comes to if you're trying to make money on a daily basis in trading. The reason for that, this is another term that you guys might want to take note of. This is not going to be anything that you'll think about on a daily basis in regards to trading, but the reason for that, we see that the average volume here in Facebook is 46 million shares traded a day. Today, the amount shared was pretty much 35 million. What it takes in order for a stock to move a significant amount, and I was just looking this one up because it did pretty well today, is Chegg. I don't know what their line of business is, and when it comes to trading, you really don't care what the company does for business. What's significant and what's important is the amount of what is pretty much the volume to average volume ratio. So on an average day, Chegg only trades 700,000 shares, but we see today they traded over 3 million shares, which means that this is so many times, pretty much 5 times the average volume in one day. And we see that 5 times that volume caused this stock to move 20% in one day. So these are the type of companies that we are looking to move. So if we're looking still on Yahoo Finance, we see the previous close on this stock is $5.89. At the end of the day, it's up a whole $1.21 to $7.10, and even after the hours, it's still moving up more than a full percentage. So I keep seeing all these notifications coming up, and I'm trying to make sure I'm not missing anything. So these are the type of stocks that we are looking for. So what makes Chegg different than Facebook? What makes it different than Ford? What makes it different than, Microsoft and all those stocks that pretty much don't move at all? I'm glad you asked. One of the things that we're going to go to now is the key statistics page on Yahoo Finance. Some of the stocks that qualify as being momentum stocks, one of the important things about them is this little thing right here called float. Okay, college book rental service. Okay, I didn't need to know that because at the end of the day, if Chegg doesn't move tomorrow, I won't be messing with them. So, it's like you'll see stocks every day that you only know them by their ticker symbol and you don't really pay much attention to what they do as their business because as a day trader, you try not to fall in love with the company itself. You just make money off of the percentage moves. So, back to this. A float. Float is the total number of available shares that the company has that you can trade. I'll say that again. Float is the number of shares that the company has that's available to trade. Chegg, the market cap is how many shares that totally exist for the company. So for Chegg itself, there's 589 million shares that can be traded, but the float is 31 million. What we typically look for when trading momentum stocks is companies that are considered low float. And low float stocks are anything less than 100 million shares because that means that for whatever that volume is, the volume to float ratio is what causes a company to move. So, I'm gonna stick on this subject for a while because it can be kind of confusing. So we see with Chegg that there's 31 million shares that can be traded on any day. Like you can't go and say I want to buy 32 million shares of Chegg because 32 million shares aren't available. You can buy 31 million shares. Okay, I'm slowing down. You can buy 31 million shares of Chegg because that's all that's available. Even though the company has 589 million shares, only 31 million are available to the stock market that people can buy and share throughout a day. Going back to the summary tab, we know that we have 31 million shares that are tradable. 10% of those shares were moved today, with 3 million shares being moved, if that makes any sense. So we see that today's volume is 3 million shares. We know that we have 31 million shares that can be traded. And with 10% of that company moving in one day, that's the reason that we're seeing moves of 20% in this stock price. On an average day, Chegg only does 700,000 shares. Today, it had 5 times that number in trading, and that is still, pretty much a huge chunk of what happens. So we're going to compare that to companies again like Apple. And if I'm still going too fast, let me know. Going back to Apple, I'll click on the key statistics tab. We see that Apple has 569 billion shares that are that represent Apple, and of that float, they have 6 billion shares that can be traded on an average day. That's a huge number. Like I said again, we look for companies that have less than 100 million shares. 100 million and lower is considered low float. So this has 5 billion shares that can be traded at any time. And once again, we see that Apple, of that 5 billion shares, they only traded 55 million, which is insignificant. 55 million shares compared to 5 billion is an insignificant number, and that's the reason why Apple only moved 0.5% today. Let's go again to another company that people typically like is Microsoft. I want to buy Microsoft and I'll retire rich one day. 26 million shares moved today, which is a lot of shares. That's a lot of trading going on in Microsoft. But once again, let's see what Microsoft is represented by. Microsoft has 355 billion shares, and of that, the float is 7 billion, 7.5 billion. The reasons that companies like Apple and Microsoft and Google, the reason they have this high float is not necessarily because they don't care about their stock price, but These are the companies that mutual funds and large investors tend to want to flock to because they're investing. They're buying something and holding it over a long term. They don't like that volatility. Volatility is another term. Volatility means the amount that a price can fluctuate in a day. So they don't like that volatility from, like, if Apple was jumping from $30 to $90 back to $60 to $120, that's extremely volatile. That's moving all over the place. These large cap companies, once again, large cap is pretty much the market cap. If it's over these billions, these are large cap companies. They want to be consistent in their price, and they want to move up at a slower pace because they want to be investable stocks. We are looking to trade, which means that we're not looking so much to investable stocks. We're looking at stuff that, like Chegg, that moves pretty much um, several percentage in a day. One of the things that I was talking about in a groupme earlier that I was trading, HTCH. That's another company that is a tradable stock, not investable, because it moves around all day. This one moved; it lost 7% on a day, and I got in it early. I got in when it was around $3.66, and I pretty much shorted it, which is something else I'm gonna go into in a moment. So just in regards to large cap volume and trading and float, just the tradable versus investable stocks. So far, are there any questions? Is that making sense before I go to the next subject? If somebody can let me know if that makes sense in the group me, or if that's something that y'all want me to keep talking about. Any questions on that? Because I can sometimes ramble and go a little faster than I need to. So let me know if that makes sense. Anybody tell me something in group me? Okay. I'm going to assume that that does make sense. All right. Um, so this HTCH is a good place to talk about this. Um, so there are two directions that a stock, well, actually three directions that a stock can move. The price can go up. I see that Michelle is typing. She is hopefully letting me know if I'm making sense. Okay, cool. I'm okay. I'm not going too fast. All right. There's three directions that a price can move. Price can move up, price can move down, or price can stay constant. If there's any other way that a price can move, you guys let me know. Yes, Lindsay, please comment. Let me know if I'm making sense, even though you are probably one of the best traders that I've taught so far. And sometimes I sit back and think that you're better than me. If I'm not making sense, please let me know. Okay. HTCH. Now we're at this stock and we see that it's red. We see that the percentage is 7% lost on the day. Yet I still say that I traded this and I made money. We see that my account for the day is green. I made like 6% of my tradable account, and somehow I'm still in third place because there's a Lindsay and there's a Larry, and they want to be better than me. So HTCH, how did I make money in this stock if the price fell? I'm glad you asked. There are three ways again that a stock can move: up, down, and stays constant. Stock can go up. So if it starts out at $3 and it ends up at $3.50, that means the stock went up. If it starts at $3.50 and it ends at $3, that means the stock went down. It starts at $3.50, it stays at $3.50, it stayed the same. As traders, we can make money in two of those directions. Intrinsically, when people think about the market, they only think about buying something low and selling something high. That's the only direction they think that they can make money. And for us in our group, and for us in trading, and however long we take this, whether it be a hobby, whether it be a career, whether it just be something that we want to play this game and see how good we can be in the game, the term for buying something and selling it higher, or the term for trying to make money when a trade goes up, that's going to be called going long on a stock. LONG, going long on the stock. That means that we're trying to make money when the price appreciates, when the price goes up. The contrast to that is shorting. We're trying to make money when the price goes down, which is what I did today with HTCH. Shorting is pretty much when, like, I'm looking at this chart right here. I'm not sure if you guys can see my arrow, but this chart over here to the side, there's a point, the highest point of the day, which is looks like it's around 380, obviously 383. That means that I would try to get this stock around some higher point and then short that stock, meaning that I am going to sell before I buy. And this is where it gets a little confusing. Like, going long on a stock, that makes sense. We buy something and then we sell it later. Shorting a stock is in contrast, is when you sell something first and then you buy it back later at a lower price. Now, we can. What does that mean? Man, why is this light keep going out? I need to start moving around. Okay, shorting a stock is so shorting a stock is comparable to saying, for example, let's say for example that I'm selling something on eBay. Let's say that, for example, Lindsay is trying to sell her laptop. She only wants $300 for her laptop. But let's say I go on eBay and I see that her laptop itself is selling for around $400. The comparable, like the way that I'm explaining shorting is like, let's say for example, I go and I say that, yo, I know I can buy her laptop for $300 and I can sell it. Oh yeah, I can't see my arrow. Okay, cool. Perfect. So I would go to eBay and I would list a laptop for $400. Even though I haven't bought her laptop yet, I have that listed. And somebody pays me $400, which means I get that money up front. Then I go to Lindsay and then I give her the $300 that she's asking for that laptop. Which means that in that process, I got 400, I paid 300, which means that I make that money in the middle. There's $100 that I just made by selling the laptop that I didn't even own. So that's exactly what shorting is. Shorting is basically, in a sense, you're borrowing shares from someone, which is insignificant. That's what the exchanges and stock market do. When you're shorting a company, the exchange goes out and finds a person that you can borrow from. That's not anything that we're responsible for. And then when you turn around and buy it, you're returning those shares back to the person. So that is what shorting is. You're making money when the price goes down. So back to this HTCH. And not to, talk about my trading, because pretty much any day, any of the other people that I've taught to trade can have better days than me. And I went huge on this one. But I started out the day by, it only allowed me to do 2,500 shares at a time. So I shorted HTCH, which is when you look at the transaction tab. Actually, let's take a quick moment to introduce ourselves to our trading simulator, Market Watch. So we pretty much have our portfolio tab. And for those that have already been trading, I'm pretty sure you're familiar with this. The portfolio tab tells you how many shares that you have at a certain particular time. Like, let's say, for example, I bought, actually, let's do it like this. Yes, I am the administrator, so I can do this. So let's go to ranking. We have one of these random people. Boom. So I'm on his portfolio tab. This right here tells me what he's trading and how many shares he has. So this guy thought that VPRT was going to go up in price. So he bought 100 shares of it. If I'm looking at his transaction tab, it just has buy. He bought 100 shares at $49.26. Currently, the price is at, wait, let's go back to him, not me. Booth fee. Currently, the price is at $47.84. So he if he got rid of the 100 shares that he bought at $49, he would lose this much right now. And I'm just trying to get y'all a little bit familiar with, the simulator tool that we're using. So that's what happens when you buy. You hope the price goes up. And like I said earlier, I was trading HTCH, and what I did is I shorted that company around $3.58. It went up a little bit, so I shorted some more, pretty much shorted everything that I could. And then the price dropped. The price dropped to $3.53. So, like in the same example of eBay, I sold something I didn't have so I can buy it back at a cheaper price and keep all that money in between. So I shorted it. This came out to an average of around $3.61. I shorted about 8,000 shares at $3.61, and I bought back a huge portion of that at $3.53, which was profit. So that is how you make money when the price goes down. You short it first, and then you cover or recover those shares later. Back to the whole HTCH thing. So before I beat a dead cow or a dead horse or whatever, does shorting make sense? I'm just making the assumption that buying shares makes sense to everybody. I could go into that if y'all want me to, but I just I figured shorting is a new concept that a lot of people might not be that familiar with. So that is shorting. Okay, Lindsay says she don't mind me showing her account. Okay, look at her being prideful. It ain't got nothing to do with you don't mind. You actually are asking me to show your account since you went first. Okay, let's go to Lindsay since we are looking at trading and she is an excellent trader. I will be the first to acknowledge that. She's actually the first person that I taught her, then started doing like classes with like groups of people, and a lot of people don't really like it. It actually takes practice. Oh, okay, I'll go over buying. I'm pretty sure Lizzie, she actually bought some stuff earlier, so hold on for a moment. Let me how do I mute this real quick? Let me take this call real quick. One moment. Okay, so I'm whack. That's cool. All right. So going back to Lindsay's account. This is how you make money in buying. Lindsay is she killed it. All right. Let's go to her second page. To earlier today, she was talking about MWA. So with the company MWA, she bought 500 shares of this company at $8.84. Then she turned around, bought some more. You can see that the price went up 12 cents. So 500 shares going up 12 cents. She made $60 already before she bought another 100 shares to this company. So this company went up in price. She sold it when it went down, which it's not that bad. I'm pretty sure she still made money in it eventually. But when you buy something, what you're doing is you're finding a point in the company where the price is at a point where you think it's going to go up, and then you pretty much sell it later. So, like, let's say, for example, she sold all 500 of those shares at $8.96. Then she would have made $60 in, that looks like a little less than 30 minutes of trading, just by, buying lower and selling higher. If that makes sense. And yes, I will lock the portfolios again before we start trading tomorrow, so we won't have any stock watchers to my people that were in my previous group. Okay. So that is. Let me go back to my notes real quick. Make sure. Okay, investing, float, momentum, volume. All right. Now I want to go over another website that my people that trade know that I talk about all the time. That we're going to get really familiar with. and that is freestockcharts.com. If you guys have your computers, you might want to start type that in. And thank you for being active in this chat, Michelle, because you are letting me know if I'm going too fast or if I'm need to slow down. So freestockcharts.com, this is pretty much what we use to predict the price of a company or predict the price of a stock. It's not just an arbitrary thing that we sit out there and guess and say, hey, this price is going to go up today, this price is going to go down. Actually, what we do is we take companies that are pretty much in that momentum range, that the volume is way up, it's a low float stock, and we go and we check their charts to look for specific places where it makes sense for us to buy, it makes sense for us to sell, because we want to enter the stock, whether we're shorting or whether we're going long, we want to enter it at a low point, at a low risk point, so that if the trade goes against us, we won't lose a lot of money. There's a lot of, one thing about trading is you have to put your ego to the side. There will be a lot of times that you will be wrong, but you want to make sure that when you're wrong, it's a lot cheaper than the money you make when you're right. So, for example, when we go back to charting, when you go to free stock charts, and I have mine set up already. So, is anybody on this site right now? I'm pretty sure you have like a line chart, and I'm gonna show you how to make your chart look like mine real quick, and then I'm gonna show you how to make this make sense. So if you're on freestockchart.com, the first thing you want to do, and I'm gonna show you how to set up the chart first before I start to explain it. What I typically do, and I don't know if anybody else does anything different, but what I typically do is I trade with candles. This is the chart that I'm looking at right now is a candlestick chart. I'm gonna wait until Michelle types this so I can know if I'm going too fast, if I need to cover something up. Okay, cool. She's not, but she can see my screen. Cool. So the candles. Pretty much like in anything, green means that the price in this period went up. Red means the price in this period went down. I have my candles set on 5 minutes. So that means that each of these candles represents 5 minutes of a trading day. So like this right here, this first candle, well, not the first candle, but this candle that I'm clicked on right now, this is from 9:35 to 9:40. So that's that 5 minute chart, or that 5 minute period. So at 9:35, while I'm looking at this, we see that this candle started off at $6.73. If I look at the last price, this candle ended up at $6.78. So the bottom of this, pretty much the body of the candle represents the part where there's the opening in the candle. So the body of this candle, the bottom of this is at $6.73. The top of this body is at $6.78. The lines on the top and bottom of the candle, those are called the wick. See, it's a candle, it's a wick. So that just represents the price that the stock moved within that period. So in this 5 minutes, we know that it started at 673. It went down to as low as 666. That's the bottom of the wick. And it went up to as high as 693, all within that 5 minute period. Started at 673. I don't know whether it went down up first, but it ended at 678, all within that 5 minute period. Then it goes to the next 5 minute period. That one started at 680. At 9:40, that stock was at $6.80. It went down to as low as $6.56 before going all the way up and closing at the height of this candle at $7.20. That is a huge move in 5 minutes. Another thing that we want to pay attention to is this area here, the volume. There is a white line. I'm not sure if you all are paying attention to that. You can see it. This white line represents the average volume of this stock over that, pretty much over a 50 period. So if you take 50 of these candles, add them up, then divide by 50, this white line represents what that average is going to be. So over the previous 50, this white line right here is the average volume. The significance of this is every time, whether the candle is red, whether the candle is green, that it goes above that white line, it tells you that this 5 minute period, the trading is that much higher in volume than what the average is. Remember when we were looking at Yahoo Finance, what we're looking for is stocks where on a daily basis, the average volume is here. We're looking for something that the trading is that much more significant in its daily volume than what it is on its average. So looking back on our stock charts, that significance also applies on a smaller time frame. So in this 5 minute period, this is way more buying than the average of that stock. So the significance of that is pretty much when there's higher volume, more than likely there's going to be a higher move. So as you can see, with this being green, meaning that there's a lot more buying, a lot more people trying to buy than there are people trying to actively sell. That is the reason why these prices are going much higher in these periods. And then, when there's a red one and that volume is extremely high, we see that the stock price is falling in that period as well. So, so far, I'm trying to just remember this first class is just going to be about the basics of trading, the basics of investing. It's a lot of this stuff that's not going to make sense, but at the same time, while we are doing active trading day, feel free to ask questions in our GroupMe. We got like 5 people that just went through our previous trading simulation that can answer the questions. I'm free to answer the questions at any time because we want to make sure that the people that are interested in trading get all the resources they can to, make sense of this. So once again, these are candles. Green, the price goes up during that period. Red, the price goes down during that period. And the candles pretty much tell a story of what is going on throughout the trading day of that stock. So another thing on this right here, free stock charts, this is now the end of the day. We see that this stock raised $1.21, which was the 20% gain. We saw that again on Yahoo Finance. So these are all indicators that are showing up on this stock, this price as well. Throughout the trading day, I pretty much never go to Yahoo. I'm never on Yahoo. I always have this up. I always have my. Might as well go ahead and lock this back up. I always have this up because this is where I'm doing the buying and selling. Unless I'm trading live, then I have up my live. I got a different app for trading on the real stock market. Somebody just text me about something. All right. So another thing. So we got our candles. We got our candles set up. And for the people that are looking at this on their computer and trying to set it up, in order to set these up the same way that I do, you go to settings and you go to properties. Then properties, and that's not the right thing. You go to, where do you go? I should have did that first. Settings. Oh, plot style. Setting plot style, and then you would change it from line down to candlestick. Couple things I have on it as well. I got the down bar being filled, so every time it's red, it's the candle's filled. Anytime it's green, it's not filled. I got that open. Then I show yesterday's close in yellow. So this yellow line right here, that's where the price closed at yesterday. So those are the things that I have basically on my candle chart. Another thing that we use when trading and we use in free stock charts is our indicators. Pretty much our indicators help us to pick low risk positions to enter or exit our stock. So you see this orange line here? That's one of the most powerful indicators that you are going to use while trading. And that is the VWAP. That stands for vertical weighted average price. I can tell you everything I know about the VWAP, but that's not important. All you need to know is how to use this indicator. Typically, when trading, when a stock is above the VWAP, the way that I use it is I only buy stocks that are above the VWAP. So I would look for positions that are when the stock, like right here, when this stock is crossing the VWAP, when it's close to it, the VWAP is located at $6.86. During this 5 minute period, when that stock went from $6.80 and it was moving up and it crossed $6.86, I would try to buy a bunch of shares of this stock at that point because it is now going above the VWAP, and that's my indicator that I only buy stocks that are above the VWAP. Conversely, I would only sell stocks that are below the VWAP. So right here, we see that this candle is pretty much a lot bigger than these. It's a lot longer than these previous few red candles when it's crossing the VWAP. So I only short stocks that are below the VWAP. That's the only time. Like if this candle goes green, I'm not looking to buy that opportunity. I will wait until it goes back up to the VWAP. It bounces off the VWAP, and I would look for another opportunity to short it. I only short stocks below the VWAP. I only buy stocks above the VWAP. That's the way that I trade. Other people have their own rules, but for me, that's been effective. So that is what the VWAP is for. The real reason for the VWAP, that's pretty much what large industry players use to buy or sell stocks. So like, let's say, for example, Barclays or RBC, these large banks that play on the stock market, they only buy stocks when it touches the VWAP. Like, let's say, for example, this right here bounces off the VWAP. This right here would be a large bank buying up all these shares. And then when the stock goes below it, that's when large banks get rid of all their shares. They don't short stocks the way that traders do. They either buy it or get rid of it. So they're getting rid of a lot of shares on this, and I'm pretty sure they're not trading like low cap companies like CHGG and stuff like that. But that's pretty much what the VWAP is used for. So since we make money in both directions, we take the opportunities where they're getting rid of it to short it, because pretty much when stocks are shortable, they move down a whole lot faster than they move up. Just like the saying is, you take the stairs up, you take the elevator down. So you move down a whole lot faster than you move up. Another significant thing about the VWAP that we see is typically when there's a cross in the VWAP, that cross is represented by a larger candle than pretty much the rest of the trading. So we see when it crosses above the VWAP, there's this huge green candle. That stock went from 680 up to 720. That's 40 cents in 5 minutes on an $8 stock. That's huge. We see that these smaller red candles, when it crosses below it, that's a larger candle than the previous few. That's another indicator that that I use the VWAP for. That is a good opportunity to trade these stocks and expect a huge move within that period. So like if this is going above the VWAP and I bought 10,000 shares, as soon as it goes into the next candle, I would probably get rid of like 800 of those shares, because if it falls back down to wherever the low that it's at, I won't lose all the money that I just gained. I would only lose it at increments of $2 per penny move instead of $10 per penny move, if that makes sense. So that is what the VWAP is used for when I'm trading. And once again, I'm not expecting you all to remember all of this today. We can go over this again in the future. I just wanted to give you guys a starting point so that when you are looking at this things throughout the day, these are things that you can go for. But actually, I'm only going to talk about the VWAP right now because I want to respect everybody's time. A couple other things that I wanted to talk about before, and I'll go over these other indicators in a later session. But another website that I wanted to show you is thestockmarketwatch.com. This is a very, very powerful website that I know the people that I've been trading with, we use this every morning, and some people use it throughout the day. I use this before the market opens because there's this section here at this green bar that before the market opens, this has the pre-market gappers. There's a list of and it changes throughout the day. So like right in the morning, this would say pre-market gappers, and it would show 1, 2, 3, 4, 5. This is about 10 companies. It would show the top 10 companies that before the market opened have the largest change in their percentage move. So typically, I look at those companies like right now, EMPH. This is after the market. So I would go here, type in EMPH, and this is all over the place. But we see that the stock closed at 967. After the market closed, this is now up to $11.50. So I look at those companies because what we do, CHGG, let's go back to that, is I'm not looking to time the bottom of this move. I'm not looking to make sure I get this at $6.56. Or actually, let's go back to what I was trading, HTCH. Um, I'm not looking to get this at the low and catch it at the high. Actually, today, when I shorted this stock, I shorted it at $3.60, 61 cents is what I showed you guys earlier. What you're doing is moving with the flow of the market. So, like, let's say, for example, the market is, or this stock is in a place where it's trending up right here. We see this is a strong trend up. I'm not looking to make sure I get it at the bottom. I'm trying to catch it anywhere in this trend and sell it anywhere in this trend. Like I don't need to get the full move in order to make money. I need to make money. That's the purpose of this is not to make every single thing available. You don't need to be greedy. You just need to make sure that you are able to make money. Hold on, dude just asked me this. So you're not trying to make every bit of it. What you're just trying to do is make a portion of it. And what we do is we are trend traders, so we move along with the trend. While this is moving up, I try to catch a piece of this. I'll buy some of this and then sell some of it later while it's still moving up. So when it was moving down today, I sold some of this and then covered it all later. I didn't catch the full move of it, which is okay to me because I still made in my day trading, I still made 6% of my gains, or close to 7%, because I was catching pieces of the move of what that stock was doing. So when the other day before the market opened, I sent out a couple stocks that I said that these are probably going to be stocks that are in play today. What I do is I pretty much go here before the market opens and see what companies have the most change, and whether it's on the left side, whether they have the change in the positive, or it's on the right side, or they have a change in the negative. Stocks pretty much, once they have a huge move, throughout the day, they normally stay in that direction. So EMPH, this is up 18% after hours. When it opens up tomorrow, more than likely this stock is going to continue to move up throughout that day. I have this bias because it has this huge jump. When it goes over 4% in one direction, more than likely it's going to stay in that direction. So you want to make sure that these are the stocks that you're looking at. These are the low cap momentum stocks that have a low float and are moving in one direction. And it is now 8:55. I feel like I covered a lot, and I don't want to inundate everybody with way more material than you can get in one day and process. So if there are any questions, I feel like I mean, there's so much more that I can cover, so much more I want to cover, but I want to make sure that everybody has an opportunity to process the things that I've talked about so far. And if you have any questions, to let me know so I can try to answer those right now. And if there's anything that didn't make sense, whether you want to ask me here or ask me through the chat, I'll be here. Oh, shoot, I'm pretty much on the chat all day. I'm done at KCPL tomorrow. That's my last day working there. So I will have at least tomorrow a free time. So if y'all got any questions, feel free to let me know right now. Anybody still paying attention, or did everybody just already check out? It said I got 3 viewers. That boy, oh snap! I got 3 viewers. I'm winning. Any questions? Can somebody type no? Thank you, Michelle. So did that at least make sense that it'll get you to a point that like I'm not sure if you started a market watch account yet. If you look at the GroupMe, if you are in the GroupMe and you look at the gallery, there are let me get to the gallery. Oh, here it is. If you look at the gallery, there are two pictures that I took of the instructions on how to go to Market Watch and start the account and be in the same trading group as the rest of us. Um, if you go and join that I think one of the things is you will be able to yeah, I'm ready for you to get started as well. But like one of the things is like I'm trying to make sure that I immerse people in this information. So like while the market is live and you're actually trading, you'll come up with a whole lot more questions because you see the price actually moving. You see that you're buying and selling shares, and then stuff will start making more sense. And I blocked off the portfolios so you can't see what we are trading throughout the day. Because the last group, we had a couple people that like, actually, we just had one person that instead of going out and looking at charts himself, he just looked to see where everybody else was trading, and he made it more into a game than it was on actually trading and actually trying to learn the material. So I kind of wanted to make sure that this time that we go through, that everybody goes through and actually trades and make sure you're relying on your own knowledge and your own information instead of just trying to play the game to win it. I mean, it's fun to win. It's fun being in first, even though I was only in first for like an hour before Lindsay took it. And but at the same time, like I'm rooting for each and every single person in this group to actually learn how to trade and hopefully one day open up a live account and start making real money. Like I've been trying to get Lindsay to, not to tell her business, but I've been trying to get her to go live for months now. And another good trader in the group is Levi. Dude is crazy. He's actually about to go live this week. So, it's like a rewarding thing when you got people that, you had some type of influence on and they're actually about to go into the market and make money and feel confident that they're good enough that they can do it. So this right here is a lot of information, but at the same time, this is like just the tip of the iceberg. There's so much more that I want to cover. We're gonna go over strategies. We're gonna go over like more trading. Yes, I actually do trade on the real stock market. Right now, I'm not because I had something happen with my job with KCPL. Actually, the reason I'm leaving there, where I had to take out all the money that I've been making in the stock market to pay for my next semester of school because they didn't come through on the tuition reimbursement. Fortunately, I was making money in the market that I could pay for school, but right now it's probably going to be like since I'm about to move to another company, probably going to be another month before I go back into the live market. But it's still good to practice trading because you want to make sure that you stay up on your skills and stuff like that. But yeah, I trade live, and I got like three different accounts now, three different brokers that I trade through. And that's another conversation that like people always want to know how much it costs to start. That's a conversation that I have with people on an individual level once they are at a point where like it's not up to me, but I want to make sure that the people that I've at least had some type of influence on that I know that you're confident and I know that you'll make money before I tell you some brokers to go to, before I tell you how much money it takes to actually start. Because I want to make sure that you're not just putting money out there and losing it. Like for the people that have been trading in the group, that's the reason why it's only 5 people that are in the green right now. And coincidentally, those are the same 5 that were in the last group that know how to trade now because even though price only moves in a couple directions, it's not as easy to make money as just buying and selling. You got to know when to buy, you got to know when to sell, and you got to not be emotional about it. Like when you lose money, people want to say, "I'm going to hold on to this until the price goes back up." You just got to let it go. Like sometimes you got to realize that it's okay. It's okay to lose as long as you don't lose big. So with that being said, that is an hour. I talked for a whole hour, son. That's an hour. I don't want to keep y'all too long. Feel free, and I hope this makes people more confident throughout the trading day to start asking questions. We got some good traders in our group that are willing to answer questions. So hopefully this gets everybody to chatting. And if there are no further questions, I will see y'all tomorrow in the group, and hopefully we all can make some money. I gotta click end, don't I? All right. I'll see you tomorrow.